Oh boy, the Bulls and Bears, they were at it today, going back and forth. What a fight. Just look at some of these swings. At some point in the day, we went up 3% in a short period of time, then right back down 2%, right back up 1%. It was a fight back and forth, and some very interesting things took place today that I want to get into on today's episode. If you are new here, welcome to the show. It's the Stock Market Brief Show. My name is Michael Silva. We use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. I want to first thank all the patrons that are active and those that are not a patron. I want to let you know that I do offer a daily trade ideas or swing trader setup here on Patreon. It's $9 a month. If you join annually, it's like $90 for the entire year, where I give swing trade setups and ideas. You get access to my weekly watch list, and that's in Excel and PDF. And then you have access to the private Discord channels as well as some general support. All right, let's go ahead and get into today's episode. Yes, welcome back to the show. So what took place today? Very interesting stuff, right? So yesterday we talked about that it looks like there's more potential for upside than downside risk. Yes, the market finished lower, but some interesting things took place. First and foremost, look what got hit. Safety trade got hit. Look what was up towards the top. Consumer discretionary, energy, go figure right there. We're going to be getting into these sectors a little bit more deeper into detail momentarily. So overall a mixed board, relative flat, but as you can see through the price action throughout the day, it threw just a lot of people back and forth because, well, it was a very wild trading session, okay? We're going to look at the risk ranges, start off there. S&P 500, it is below the lower expected move as it stands right now. And understand this, about 70% of the time it'll close within this range. What happens if it doesn't? I mean, it's happened before. Don't worry about it. But understand if it gets far deep outside of it, new hedging takes place. And what can potentially take place from that point is you get further sell-side activity. So I want you to understand the context of everything, right? Understand the context where we are, and then we'll kind of dive into my thoughts a little bit more. So the context is still bearish, right? In 2022, we are bearish, right? So lower highs, and we have lower lows. But there are some interesting things taking place today. Note volume, all right? So we came all the way back up to this area intraday at 427.50. That is going to be an area that we're going to want to pay close attention to. It wasn't quite 427.50, it was 427.21, but it's just right around there. So, and if you just look back to the left of the chart, clearly an area of resistance. So we did have quite a significant move intraday, and then we closed basically around the low of the day. Okay, so let's continue on to the Qs. The Qs, this right here is a high wave candle. It represents that there's been a large fight between the bulls and the bears. A large range there, having these long legs and small body, lets me know a couple of things. So first and foremost, you get large body candles to the downside. That is an authoritative type candle. Then all of a sudden you see a small body. That signals to me that momentum is slowing a little bit. And then you see these long legs on the candle, or long wicks, and that shows that the bulls did step in at around this point. And this could be short covering, right? It could be a bunch of number of things, a bunch of different narratives, but I want you to understand the psychology in this moving forward. Okay, so there was strength today, as you can see, a high of 333.21 in the Qs, showing that there is some potential movement that could happen to the upside. Now, these can be exhaustive type candles, and you can pair that with volume here too as well. And where do we close? It's like a magnet, right? That lower risk range right there. And if you take a look at IWM, interestingly enough, very similar type candle. We actually created, I don't know, I can't tell if this is a new high on this candle, but we did come all the way back up and then reversed on the day with some good volume. And this is showing a little bit more relative strength than the other indices. So small caps have been showing just a little bit more strength. Now, a couple interesting things taking place. First, I wanted to look at the market health dashboard. This is looking at the New York Stock Exchange. We're down, a 10% year to date. So getting hit pretty hard. And we just had another, new low for the closing year here. But I did want to point out that, interesting enough, although that we had a new lower low put in, we did actually have an uptick on the NIMO, which is a little bit of a positive divergence that took place. Also to note, interesting enough, as the market's been selling off, do you see this spike right here? That big green bar? That's the new highs. So we saw just yesterday on this big leg down, actually quite a bit of new stocks that we haven't seen for, well, dating back till November of the prior year, really, making new highs. And that's interesting coming from a bottom. So it's showing me that there is a little bit of underlying strength in various industries and or sectors. Okay, and then we saw also that positive divergence right here, the NIMO that I just recently stated. Let's continue on to the composite. So the Nasdaq composite, similar thing, right? NAMO, positive divergence. And you can see here, I just want to point out the candle on the Nasdaq composite, very similar to the Qs, very, very small, minimal body, a lot of volume coming in. And that could represent a potential momentum shift, so it's going to slow down to the downside, and we may get somewhat of a bounce. There's a couple other indicators that I want to go over, and then I want to go over into the sectors that I'm kind of seeing things take place. So first and foremost is this one. I haven't brought this one up for a while because it hasn't created a positive and or negative divergence for a while. But this is actually looking at the ratio of S&P 500 over TLT, so bonds. And if you match this with the S&P 500, you can actually catch positive and negative divergences here, and it could give you signal to when the market might be getting weak or potentially get weaker or get stronger. So, for example, the last time I really looked at this was this, when the ratio has a high and then a higher high, but meanwhile the S&P 500 was putting in a high and a lower high, it signaled that there could be some further weakness ahead. And there was some further weakness ahead. And we've seen that same thing right here, and we saw that same thing right here. Now, these boxes that are highlighted right here and here, those represent positive divergences that are currently building. So that's when the ratio actually puts in a lower low, but the S&P 500 puts in a higher low. And as you can see right now, we're relatively flat on the ratio, but it is putting in almost there a lower low and or, it's flat. And then the S&P 500 is clearly putting in a higher low. So the last time that took place, we did see a rally start to move. And that does match up with the possibility that we could get some sort of rebalancing into quarter end, and we get this markup sort of thing in various stocks and or sectors, matches with seasonality, right? So we've been talking about March, and a lot of people have been saying, no, don't put too much weight on seasonality because X, Y, Z, all these other narratives. I'm just pointing this out because it is something that a lot of people will be paying attention to despite all the market risk. So actually that's a good note to point on, is everyone is so focused on these certain things that are taking place that are mainstream news that they tend to forget that, okay, so when everybody crowds into one specific area in one trade, that means it leaves opportunity, where other people are not looking, and they may look once that trade starts to settle down. Not to say that what's going to happen or this is even going to play out, but we need to be aware of it. Okay, and now another thing to call out here too is the buy and sell signal. And the buy and sell signal hasn't updated today, but I do know that the CPC, I think, printed a 0.96 if I'm correct. So this the 10-period moving average hasn't crossed down through 0.95, but when it crosses down through 0.95, that is a buy signal. The last time it did it was right here, and that gave me indication. But I tell you what, I want to tell everyone this because I want people to understand kind of the context of, okay, what was going on when this triggered. And I'll tell you, I was talking about the Santa Claus rally, and everybody and their moms were telling me there is no Santa Claus rally coming this year. Everyone was saying, yep, goodbye, Santa Claus didn't come this year. And there was a couple of signs and a couple of signals, including seasonality, that were saying, okay, well, it might not feel like it because we were getting all this weakness right into here. And I kid you not, as soon as it flipped to a buy signal, we started getting a monster rally, and then up towards the top, that's when we started talking about there was actually weakness coming back into the market, and then we sold off. And if you don't believe me, you can go actually watch the episode when it actually flipped, the signal flipped. I think I said that the buy signal flipped or something like that on the episode, or named the episode that. But besides the point, this is not a holy grail by any means. It is a sentiment indicator. It gives us shifts in sentiment. And what I'm seeing now is a lot of bearishness, rightfully so, because, well, we're basically in a bear market. And this could be, though, a short-term potential trigger where we see some relief take place. And as we're at the lower risk range, right, as we're seeing a couple of positive divergences being built out, you need to be aware, and mainly if you are bearish, that's totally fine. But understand that maybe right here might not be the best time to start loading up on puts or adding to a position. Right now might be a time to start to look to cover. and or look to reposition in if we do get a bounce. Okay, a lot of people get confused when I say these type of things. Moving on, XLP. So consumer staples got hit, and it got hit hard. So that is an indication telling me that, okay, interesting. The safety trade got pushed to the side here, which could indicate that we might see some of these other sectors that have been getting beaten up have some relief. Okay, so that was hit hard. I'm still watching this trend line. I still have a position in XLP. It's basically trending the 200-day moving line. So if I get a couple daily closes below that, then I have to get out of the position. But I'm waiting to add to it to get a little bit more strength. So I'm keeping into my position just to have on, but it's a relative small position given the amount of volatility that we have been seeing. So full disclosure there. Consumer discretionary, right? So consumer discretionary has been getting hit very hard, but today we saw a little bit of relief as the safety trade kind of backed off. And what I found interesting was look at the volume that came in on this specific candle. That is a big, big bump up in volume, and this type of move can signal a capitulation, right? People were saying this last move did not look like capitulation. Well, this amount of volume could very well spell out capitulation. Now, you still have to manage risk, all right? But just note that it is, a double bottom right here, potentially. We may very well come under and undercut it, but if you were, saying, hey, maybe I want to get a long position, what you would do is, what you'd want to look for is if it does come under, wait for it to price to come back up and pick up an order and see if you can just put a stop under that level. Or you can get in, beforehand, and then if you just get taken out, just get out of the position, right? Those are a couple of ideas that you can look for potentially going into the next trading day. Also to note, all right, look at the RSI. We have a low, a higher low, a higher low. All right, low, lower lows right here. Well, low and then a little bit of a higher low right there, but still positive divergence taking place, okay? And then you see it in the PMO, the MACD, positive divergence right there as well. So seeing a bounce, understand that it seems like it's very likely as there's a couple of things lining up right now. That's why I'm saying, just be careful, be aware of this environment. But pay attention to the context of the chart, because a bounce does not mean that we're going to all-time highs. A bounce simply means that it could be a counter bounce in a bear market where we have lower highs and lower lows. So we can bounce up all the way to 175 or even just below 180. That would still be a lower high, okay? But understand that there's opportunity here in the short term if we do move up higher. Semiconductors got a lot of relief today, and look at the volume that came in. Very similar type candle. Okay, it broke down these key levels, so be mindful of that. All right, okay, this could have been very well, triggering some shorts or, hitting some stop losses, and then we started coming back up. We did see strength. It was up 1.5%. Very similar, yesterday I talked about JETS, which is the airlines, and how it was down like 11% or something crazy. I was like, yeah, look to buy this because it's like a rubber band. It pulls out way too far, capitulates, right? And you let go of that rubber band and it snaps back. And that was up, 3, 4, 5 something percent. I can't remember. I have to pull it back up. Okay, so that's something interesting also, okay, to pay very close attention to, individual semi names. Okay, moving on. XLE. Energy. So this is why I've been saying that a lot of people have been focusing so much on energy, rightfully so, because, well, all energy stocks have been doing really well. Not all, but, the majority. But take a look at that volume that came in today. Almost 100 million shares traded back and forth, okay? Volume was gigantic. Look at that candle. The candle is a high wave candle, okay? So it shows us we have some authoritative candles moving up. This was also kind of a high wave. I would call this just a spinning top type candle, and a high wave candle is basically a spinning top just with longer legs or longer wicks. So it shows that there's still more indecision and a fight between bulls and bears here. So if this is that kind of exhaustion type boom, blow off move, and it could very well go higher, right? This is where you want to be careful, is in individual energy names, because this can very well represent that we might start consolidating or we might pull back a little, given the context of what's going on in the chart. Now, we could very well go 120, 130 million in volume, and then we get even a bigger candle, right? And within that would be the parabolic blow off top. But it is something still to note here. And I wanted to zoom out of this chart and show you, okay, when's the last time we've hit these type of shares? Well, we've actually hit this type of volume, actually at pivot points before. So it doesn't happen often. If you look back 10, 15 years, you're only going to see that, it's happened 4 times or so 3 or 4 times tops since 2008. And each time has been somewhat of a pivot. Okay, so right here, right, we hit over it, and that was coming from a downtrend. We then gapped up, and that started a rally up for over a month, right, of 42% gain, and even went higher, right? So that was the pivot point from this low. The last time prior to that was actually coming off of I believe this was the COVID bottom, and we started moving higher and higher, and then we had this big rip of volume, that's that blue line going down, and we actually fell 17%. But understand what happened. We pulled back 17%, but that set us up for a big move higher. So I'm not saying that this is going to crash all the way down, but what I am saying is even if we do pull back, you need to be prepared to look for strength or consolidation or setups in this sector. So while everyone's trying to jump in and trying to rush in, okay, maybe this is the time where we just step back a little bit is what I'm thinking. See if it does set up, see if it does pull back, and then we enter at a more pristine time. That's what the chart's telling me right now, and understand that that's my opinion. Now, let's take a look at gold. Gold has been on a monster tear, and a lot of people are now pushing into mining stocks, right? The mining stocks, I have not been able to get in. I missed the move in 2 days, and I said I'm going to get in on a pullback, and it hasn't pulled back. It's been going completely vertical, and you know, I know better to chase, so I'm not going to sit there and chase. But now take a look here at what happened, right? We just hit a high of 2,078. So we're running in to this previous August peak over here, and it was a monster move. This is going to get digested at some point, and it could very well be that we got this long tail, right? Bam, bam, and this could be a level of resistance. It was a strong move into resistance. It might take a second to just chill out for a little while or pull back, okay? So that is another thing that I want to make sure everyone pays attention to. And another reason why I'm saying this is if you bring up a scanner and you look at, okay, what are the 52-week highs? What are making 52-week highs today? Notice this list. It is just gold names and it is just oil names. So that is where money's pushing into. But if you take a look even closer, what you'll notice is on the volume profiles on all of them, they're all putting in large, you know, just more than it's seen pretty much, you know, dating back, well, how far this chart goes, you know, prior to into 2021. So we're seeing more volume on these last traded day, this last day, basically than we've been seeing all along. So this kind of tells me that this could very well be that blow off type top or period where it's exhaustive. Okay, it's an exhaustive move, and now we're going to start pulling back in these names. Now, keep in mind, these it could if you think it's going to just drop all the way down, understand that things can get crazy and they can stay crazy for a long period of time. So this might look like a lot of volume right now, but you never know. Like tomorrow we might get a volume that's even bigger and it moves up even higher, right? And then we're like, oh, well, the last day's trading volume didn't even look like anything. Understand that I'm well aware of that, and I want to make sure that you're aware of that. But now, as it stands, we are seeing that this top list, that they're all making new highs. There's a lot of candles on here, like RIG, right? It looks like a exhaustive type candle, right? XOM, it's a spinning top type candle. SWN, shooting star type candle. I say Schlumberger looks pretty darn strong, right? That looks pretty authoritative. Even GLD, looks pretty authoritative, but it has a high wick up there. AUY, another minor, upper wick, it's shooting star type candle. HAL, shooting star type candle. KOS, shooting star type candle, and so forth. I'm not going to go through all of them, but just be mindful of that they're all taking place with a big spike in volume too as well. All right, now a couple of other things that I want to point out and just reiterate. So it might sound that I'm pretty bullish right now, and the thing is, well, I wouldn't be bearish where we are right now. Right? I'm not going to take bearish trades right here unless if a specific stock looks really good to set up. And I understand that there's geopolitical risk and we're about to move into a tightening period and all of this stuff I understand. But looking at a chart from a price action perspective, I don't like going short at extended levels. I want to wait to see where it goes and then short into strength and then also buy into weakness and play very tactically. This is the Wilshire 5000. This is interesting, right? So the greater context of the market, and the Wilshire 5000 is basically all the stocks in America, all right? Lower highs, lower lows. Now, what I want to call out is huge volume today. Huge volume today. Same type of candle that we've been talking about. positive divergence on the MACD, positive divergence on the relative strength line between the Wilshire Composite and the S&P 500, positive divergence on the RSI 2 as well. So as we're getting weaker and weaker here, we're starting to see that weakness, the momentum to the downside could very well be slowing, setting us up for a rally that matches with seasonality. Now, keep in mind, this level right here, 44,500, that is still a very, level that we need to get back above to feel a little bit more confident. We've broken down from what looks to be a head and shoulders top, right? We talked about, this double top here. We talked about this bear flag right here. Back down, we back tested. We need to get above this level. So you should be cautious, going forward and hesitant, until we get above this level and even recapture some of these moving averages right here. Okay, and that doesn't just go with the Wilshire 5000. If you look at the Dow Jones Industrial Average, also looks like, perfect head and shoulder breakdown, right? Bam, 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 a lot of area of distribution. We broke down, we back tested, and we're coming back down. 33,750, maybe even a little bit higher. Understand that even if we get a rally, it's still lower highs and lower lows, okay? So be very mindful of that. So just because I'm seeing some things take place that looks like we can very well get a rally does not mean that we're going to rally to all-time highs. And I got to say that over and over again because people get confused. And then we look at the New York Stock Exchange. We've been watching this one, tracking it actually for a while because we noticed the advanced decline line already breaking down. Okay, so lower highs, we cracked down through this area. It looks like just a monster, period of distribution, and we're breaking down. Are we really breaking down to just go right back into here? I don't know. It's always a possibility, and you want to keep that open. But if we get a rally, that can take us from 15,600 up to 16,000. So it's a very strong rally, right? And that would just be a back test. So understand the greater context, lower highs and lower lows as it stands right now, okay? That is all I really have for you on today's episode. I guess just to really wrap it up in the conclusion section, I'll just once again just let everyone know that volatility, it's still currently trending right now, okay? Higher highs, higher lows, and as we've seen on in the markets, that resistance is continuing to hold its levels and support is getting broken, okay? So resistance, it managed to hold. Support continues to get broken. That means we are trending lower, but just know that when we are trending lower and if we are in that bear market, which it definitely seems like we're in a bear market, it sets us up to see some monster rip your face off type rallies, and you can either be very tactical and try to catch that or be aware of it if you are shorting the market so your face isn't ripped off along in that process. That's all I got for you on today's episode, everybody. Have a wonderful night.